The thing that really irks a lot of people, not just here, but across the world, is this. While they're swimming in the red, Wall Street continues to backstroke in the black. Now, as the saying goes, payback's you know what? European countries are blocking U.S. banks from making lucrative deals worth hundreds of billions of dollars in euros. RT's Marina Portnaya joins us live from New York City, the heart of that financial capital. Hello to you, Marina. This move is being considered as retaliation, revenge against the U.S. banks for starting a worldwide cash crisis. What are the limits the Europeans are putting there in place?
Yeah, this payback, Cedric, is not necessarily pretty. European countries are essentially blocking these big U.S. banks from selling off government debt worth billions. Now, of course, this means that huge Wall Street players like Goldman Sachs and J.P. Morgan will miss out on lucrative deals. Essentially, what is being reported is that European government leaders have not had their confidence restored. They believe that Wall Street is still taking risky bets and is not putting stability before profit. And Western European countries, it's been reported, have to raise up to $500 billion just to pay back all the debt and the bailout money and pay for unemployment. And this is something that is a protective measure. Now European countries are now sticking more with their European banks when it comes to acquiring or dealing with government bond debt. And for example, Greece, Spain, Ireland, and Belgium have not used Wall Street firms in the largest 10 deals of this year. So obviously a big shift in the way that they are practicing their economic policies.
So Marina, you're talking about the stonewalling by European countries of American banks. So what's this going to mean for those American banks?
Well, missing out on these government bond sales, essentially, it's missing out on one of the top earning fees that U.S. banks could be profiting from. It's estimated that Wall Street makes approximately 2% of its annual money from these sales, these type of government bond sales. And while that may not sound a lot, let's just give you some numbers. Barclays Capital made $92 million just taking a 1% fee on selling a government bond debt. So it is obviously a lucrative loss if this in fact remains in place, and these Wall Street banks that are so used to profits will have to now suffer a big blow.
Okay, so these European countries, Marina, seem like they're saying, okay, U.S. banks, not so fast by stonewalling them with these deals. Are there any other measures these European countries are taking when it comes to U.S. banks to kind of curb the power they have?
Absolutely. The European Union is considering to create its own monetary fund, similar to the IMF in Washington. It's been believed that they would like to deal with any kind of financial problems within the boundaries of their own country, in their own home. And of course, they say this after seeing what has taken place in Greece. So lots of moves being made or considered to obviously not rein in Wall Street, or not be so systemically tied to them and be influenced by them following this whole financial meltdown that we saw occur 18 months ago.
Okay, Marina, here's a play on words. We could always bank on you. Anyway, thank you so much for joining us, Marina.